What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is December 28th, 2021. We are just a few short days away from year end. Today we're going to talk about the price action in the indices. We're going to talk about trades, and we're just going to talk about mindset into the new year. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, don't YOLO your entire account to any one of my trades or anyone's trades for that matter. Let's dive in here. So box scores for the market today. We have the S&P 500 as measured by the SPY finishing down 0.08%. We have the NASDAQ QQQ finishing down 0.46%. IWM small caps were our worst performer today, finishing down 0.61%. Dow Jones finished up 0.29%, our biggest leader for the day. And we had the ARK Innovation ETF finish down 1.83%, our worst performer on the day. And if you look at the closing ranges for pretty much all of these indices, they all close towards the lower end of their daily range. So on a net basis, this market was sold. Keep in mind as well, though, the volatility actually dropped for 3 out of 4, or really, 3 out of 4 of these where I'm tracking the volatility. There is no ARK volatility index. Someone should actually create that. But yeah, you can see, with the market dropping, but volatility also dropping, that's actually a positive divergence. And then the breadth, you can see, was positive for the SPY, 62% advancers, but we had negative breadth for most of these indices. You can see ARK pretty much had a washout, down 1.83%, only 7% advancers. So definitely a very mixed bag. A lot of choppy action on the tape today, and we've had about 4 days of just a really nice rally. So this is perfectly normal, perfectly welcome, when it's day 5 of a face-ripping rally. Looking over to our heat map, you can see we had Tesla down a smidge, down 0.5%. We had Nvidia down 2.01%. And those are our two pretty much most risk-on stocks within this S&P 500. So I always like looking at those to gauge the risk sentiment in the market. You can see consumer defensives were bid, industrials were bid, and one that stuck out to me, we had Disney, which was bid pretty nicely throughout the session. Sectors. You can see there was some selling in the leaders. So the Semiconductors Index, this has been our big time winner really for most of 2021. And that was down 1.1% today. And then you can see we had selling in these ARK funds, of course, blockchain assets. We had a failed breakout in Bitcoin, and the blockchain assets, the crypto miners really suffered as a result. And you can see solar stocks were down, Chinese tech was down. Best performing sectors, we had aerospace and defense up 0.6%. That's now moved into our number 3 momentum slot. And you can see we had transports up, consumer staples, utilities. So some of these more defensive areas of the market were hanging in there today. Style factors, we had high beta, which is now in our top slot, selling off. Momentum was down 0.81%. That was our biggest loser. And then our biggest gainer for the day was high div, low vol. So you can see this is a pretty risk off configuration within these style factors. And then seasonality, now we're just starting to chop into the last couple days of the year. That's very normal given where we are in this seasonality. I think we all have this natural propensity to think like, oh, if the market just rallied 4 days in a row, like it's going to rally another 4 days. It's typically not how it works. Like if you've enjoyed a nice 4-day just face ripper of a rally, that's where it makes sense to take some chips off the table. And that's what I did yesterday. I reduced a lot of my options exposure, and now today the market kind of came in a little bit, so I'm glad that I went ahead and did that. And that just shows it's always good to sell into the strength. All right, let's take a look. We're going to go to these headline indices first and just see where we are. Was there any technical damage today? Was there not? And what I will say when looking at this S&P 500, no technical damage whatsoever. The market closed down a smidge. If I was bearish on the market, I would be pretty concerned here. The fact that we had 4 days that were just face ripping rallies, and now today all we're doing is just consolidating. To me, it really showed prices are being accepted up at these highs. I know for some people it might be like, but the market didn't go up today. Like, what the heck? But yeah, after 4 days that are just straight up, a nice consolidation, little doji candle, it's actually a pretty good thing. You can see this 5-day EMA, that's just going to start to catch up to price even more. Same thing with this 20-day moving average. So overall, I think this is a big win for market bulls. And then you can see this is in our after hours action. The futures have already started trading. And you can see right now the market's up about 0.16%. So still not really any change. And then on our hourly chart, you can see we're already at our R1 pivot. One thing to keep in mind, we do have a call wall in the market at the 4,800 strike. And what that means is that into this quarterly expiration, which is happening this Friday, there's going to be a lot of dealer hedging going on at that 4,800. That could act as a magnet for price. It's also a big resistance level. So definitely going to be watching that. I would not be surprised if we just kind of chop into the end of this monthly expiry and we close somewhere around 4,800. So yeah, for today, I really didn't do all that much in the way of trading. You can see my trend model is at a +3, so that is good. But I think this is going to be a theme throughout 2022. Like for instance, like if you had been managing your risk and you were able to actually be putting on risk into, say, this first nice green candle, or even into this red candle right here, you're not really super worried about, like, I got to add risk up here at 4,800. And I think that's going to be the case for the majority of 2022. These investors and traders that you see, maybe they're on financial Twitter, maybe they're somewhere else. All they do is just buy calls every single day. And like once the market is overbought, then they're like, oh yeah, the coast is clear, now I can get long. And it's really just you're buying calls every single day. It doesn't matter if the market's overbought or whatever. I think those players are going to have a tough time in 2022. And the players that are swing traders that have to trade every single day, have to be getting more long each and every day, I think those traders as well, they're going to face issues because there are certain days where you have a lot of edge and there's other days where you don't. And where this really comes into play, if you're watching the screen, and you're watching it from 9:30 to 4, let's say even earlier than that, from let's say like 8 o'clock to 4, and you're watching every single tick in the market, your perception of time is different than let's say like you do some morning work, you're active in the market till 11, you take a break, you come back, see what changed into the close, you're sort of more like getting some time up from the screens. If you're on the screen the entire time, it feels like more time is passing. So if you take an entire day without trading, that's like a big deal because every second you're asking yourself, you're looking at the screen going, should I place a trade here? Should I place a trade here? Is there a trade? So basically you're making, let's call it 1,000 decisions a day. And you have to tell yourself no 1,000 times. That other person that they maybe go to the desk, 3 times a day when the market is looking bad, they only have to say, no, I'm not going to take a trade 3 times. So say if you're like one of those people that you feel like you always have to be active, it actually helps you. And the market's kind of like chopping around. You have to get up from the desk because in trading, it's not a 9 to 5. You're not getting paid to just punch the clock and like, oh, I'm going to get paid the more that I trade, or I'm going to get paid the more that I sit at the desk. Put out a tweet this morning that the more you trade doesn't mean you're going to make more money at all. And I think especially in this coming year, people that have lower trading volume, I think are going to do better because I think it's going to be more about picking spots rather than just like, we're in an insane bull market, buy everything every single day. So that's a little bit of a rant, but I think that's going to be very important into 2022 to just look every day and say, is my edge here? Do I have a really good risk reward buying here? And just always assess things that way. NASDAQ finished up, or actually finished down today as measured by the Qs, down 0.46%, but you can see we're having a pretty nice overnight session. One thing to keep in mind, this is huge. We have the JP Morgan collar trade that is expiring on December 31st. And basically it's this big fund that they have this position where basically they're putting a collar on, which is they're short a put or a put spread, or no, they're long the put spread, excuse me. So they're long the out of the money put spread, and then they short an out of the money call. Basically what that does is it limits their upside because they're shorting that out of the money call, but it's also limiting their downside because they're long that put or that put spread. That trade gets rolled at the end of every quarter. When it gets rolled, there are subsequent flows that come into the market, and it is looking like the roll this quarter, I believe the strike price for the call is like 44.50, and now that's going to have to move up to either 4,900, 48.50, somewhere around there. That's going to result in net buying by the dealers that are hedging that trade. So into the last, couple days of this trading year, I think the market could remain buoyant, and we're going to be talking about that more in our trading room in the Pristine Capital Discord. But that's just something I want to keep, at the front of mind. We do have that hedging trade coming up, and that could be a nice tailwind for the markets. So let's see, we have Dow Jones trading up a little bit in the after hours. Dow Jones holding up at this top of value. So all these indices look pretty good, and really except for these small caps. The small caps definitely a little bit on the weaker side, but even the small caps, they're kind of holding their own after a nice 4-day run. So even though the market was choppy, maybe a little bit weak today, definitely not the end of the world in any way. But again, if you were staring at the market for the entire trading day, like, it probably feels like the sky is falling because the market didn't flip green by the end of the day, but it's really not the case. Let's take a look. Another thing I want to point out, our Squeeze Metrics Dark Index came out and it's at a 42.2, and that's a pretty noteworthy decline in this Dark Index. So again, more to come on that for Pristine Capital members. I'll be posting something on that likely tomorrow morning, but this is something I'm monitoring pretty closely. So yeah, we have that. Now let's take a look here at my trades for the day. Let's take a look. Options trades. I reduced a lot of my options exposure yesterday, and I added this Facebook January 21st 360 call. Small position, 1-star trade. And I saw that Facebook was breaking out of consolidation. As the market softened up a little bit, you can see this one really just squatted. So it's not like we broke down or anything like that. We still are above this monthly value area, but this stock did come in. It wasn't able to push out to this Venom R1 pivot. I don't think that's the end of the world because, again, this stock pretty highly correlated with the S&P 500, and the S&P 500 ended up closing a little bit weak today. So yeah, put that one on, and then I did take some stops today. So one trade that I attempted this morning was Digital Turbine. There was a headline that they were going to be doing a multi-year partnership with Google. And I wanted to see, does the market really like this headline, or does it sell off due to the headline? And in the pre-market, I was seeing really nice volume come into this stock. So I entered this one shortly after the open. And what I wanted to do was see if we closed above this 200-day simple moving average. We did not. So I proactively managed my risk on this, cut this trade, and it ended up sinking, another like 4% from where I cut it. So I entered this one for 68.80, exited for 65.65. No big deal. Closed the trade, managed the risk, and then you just keep it moving. That's really just part of the game. Same thing for Hut 8 Mining. I was playing this one for a breakout in Hut 8 Mining. Or let's take a look at Bitcoin actually. Bitcoin. Yeah, you can see the breakout failed. So we tried to get above 52K here, and it looked like the coast was clear, but sellers stepped in. So I saw that and I knew immediately I'm going to go ahead and stop out of my Hut 8 Mining today. And really, that's what you have to do as a trader. If you play for a breakout and that breakout doesn't happen, you should no longer be in that trade. So yeah, took a stop on Hut 8 Mining, and this one, from where I stopped out, I actually stopped out a little bit higher than where my stop out initially was set. Just because I was like, hey, like the reason why I got in no longer valid, and this one ended up sinking like a rock throughout the end of the day as well. So yeah, crypto not really looking so risk on here. So we're seeing some mixed messages. You know, the volatility's come in a lot. Seen some nice action. The indices, when you look at Bitcoin, not really the best indication here. Same thing for Ethereum. And then when you look at the ARK ETF, also not really the best signal heading into the new year. This ARK ETF was kind of falling over today. And then Tesla, let's take a look at that one as well. Tesla, not bad at all. Really just consolidating after a nice run. Nvidia, same thing for the most part. So yeah, these I'll be watching these for the next 2 days for sure, really until the end of the week. All right, let's take a quick look. And basically what I did in the morning, I put those trades on, took those stops. Once I took those quick stops, I was like, okay, the market's choppy at best, a little bit dangerous at worst. So I was like, you know, last couple days of the year, you know, this is not where I'm just gonna be like trading my heart out. You know, this is where you just go, okay, you know, let's see what happens tomorrow. So I think that's super important. Just be patient, and things will come. You know, setups like we saw, you know, just a few short days ago, you know, those are going to reappear over and over and over again. All right, let's take a look at our options race real quick. Whoa, so we got Tesla, we got 2 billion flow coming in, 2.4 billion. Okay, 2.8 billion for Tesla. You can see we have really the normal suspects. We got some AMD flow, some IWM, TQQQ coming up, and we have Alibaba as well. So I headlined today that the CCP wants Alibaba to start developing semiconductors. Thought that was pretty interesting. In SPY, sort of a mixed bag. A lot of calls going up for SPY today as we hit these, you know, pretty much like overbought levels. Let's see what we got as well. SoFi, some calls going up for SoFi. Wow, look at this. This is July of 2022 at the 20 strike. More July of 2022 at the 15 strike. I'm actually short some put options in SoFi because I want to buy it if it heads lower, but it doesn't look like I'm going to get filled on those puts. I sold the 12.5 strike puts somewhere down here. So yeah, it doesn't look like we're going to get there, but yeah, SoFi, this is definitely not in the most bullish trend. That's why I just sold some puts. Yeah, you can see this is historically where it starts to bottom out around this 14 level. So that is definitely interesting, pretty unusual activity there. And let's take a look. I want to find the TQQQ. Whoa. And these are for December 31st and January 7th. So very short term with some big flow coming in for TQQQ. Very interesting. Let's see, we got this. Okay, and let's check out one more. We have Roblox. Let's check that out. Yeah, and a bunch of calls coming in for Roblox. These are the March 115s. These are the December 100s. December 110s. Wow, these are for January of 2023, the 100 strike. And there was actually an article someone in our group shared today. Wow, this one was down 5.97%. And it was showing that I think Paris Hilton was, you know, getting established in Roblox. Some article about her hosting an event in there. But yeah, Roblox, you know, we look at the technicals, you know, not looking the best, I must say, but pretty much all these stocks that are highly correlated with the ARK ETF really got sparked today. Yeah, and Roblox now below this 50-day simple moving average. So yeah, not the best look for pretty much, you know, this entire group of stocks. We can see Unity. This is another one. As of yesterday, I was long call options, closed those out. If you watched yesterday's video, rolled it into some common stock. And I'm glad that I did, because this was down 3% today. And it's so much easier to manage that risk when you take the profits from the calls and you just roll into some common stock. But yeah, this whole group kind of struggling today. So with that being said, that about does it for today's market recap video. Hope you all had an awesome session, and I will see you all tomorrow.